Right. So very good evening, everyone. I hope you all can hear. Right. So today I thought of discussing the cash flow statement. Right. The company accounts I have shared some videos which I have done. So it has many questions we already discussed. Right. So during the next week I will discuss more questions from company financial statements. Okay. So today we will discuss the cash flow statements. This is one of the easiest chapter I can say. Okay. Right. So in this, you need to understand some basic things, right? If you understand the method, the steps, then this is very simple. Okay. So let me come to the introduction part. Okay. So what is the cash flow statement? Cash flow statement is a statement. It is not a ledger account. It is a statement which records all the cash and cash equivalent, right? Not only the cash, we record cash equivalent. That means the asset similar to cash, right? Highly liquid, short-term liquid assets. So we record all the receipts and payments. So that is what we call a cash flow statement, right? So that is introduction. So you need to know the introduction or the definition of cash flow statement. Then the activities, right? There are 3 activities in cash flow statement. Operating activities, okay, operating activities, investing activities, and financing activities, right? Number 1, 2, 3. Okay, so operating activities means the day-to-day activities of a business. So especially the mainly current assets and current liabilities. The transactions related to current assets and current liabilities are operating activities. But if you take a balance sheet, we have current assets and current liabilities, right? So anything related to stock, debtors, right? Creditors, short term, we call it operating activities. Then the investing activities are activities related to non-current assets, especially the property, plant, and equipment, PPE. Then the financing activities are related to equity and non-current liabilities, the stated capital, reserves, and non-current liabilities like bank loan, debentures. Okay, so I'll ask some questions. Tell me, uh, interest income. Interest income. What is the activity? Interest income. What is the activity? Okay, I got only 2 answers. Others are yes. Right. So everyone everyone has given the same answer, but that answer is wrong. Interest income. Interest income. What is the activity? Everyone has given finance. Finance is wrong. It's not financing activity. Why do you get income, interest income? From which item you get the interest? When you deposit in a bank, let's say you have a fixed deposit in a bank. For the fixed deposit, you get an interest. So that interest income is related to your non-current asset. Interest income. So that is not a finance activity, that is a investment activity. Investment activity. So clear? Do you understand the difference? Tell me dividend income. Dividend income. Dividend. Right. So you understand dividend income also received because you have invested in other companies, investment in shares. So that is received for investment. Then dividend payment. Dividend payment, last one. Dividend payment. What is the activity? Dividend payment, yeah, that is finance because dividends are paid for our equity, our stated capital. If you pay dividend, that is a finance activity. If you receive dividend, that is a investment activity. Interest paid is a finance activity because interest are paid for the non-current liabilities for bank loan. Right? Interest received, it's an investing activity. Okay, I hope you all understood the activities. So there are only 3 activities. Okay, then we are moving to the third part. Preparation of cash flow statement. There are 2 methods to prepare the cash flow statement. Direct method and indirect method. So we will be preparing the cash flow statement either using direct method or indirect method. Right? Okay. Right. So our questions will be based on preparing the cash flow statement either using direct method or indirect method. Right? So the main difference between direct method and indirect method is the operating activities. Operating activities. If you can understand the operating activities, then you can do any method. Okay, so let me show the format, and after that I will explain a very basic example in both the methods. Okay. Direct method format. Now I am giving the direct method format. Direct method. Right. So this is the format of a direct method, cash statement, direct method, operating activities. Only difference is in the operating activities. Okay. So we will prepare the cash flow statement similar to the cash book, right? What are the operating activities? One is cash sales, other one is received from debtors. So these are the 2 methods we receive cash sales, and receive from debtors. Okay, so how do you find these values? Normally, if they ask direct method, you have to prepare the ledger account because you will be getting the income statement and statement of financial position. So to identify the cash received from debtors, you need to prepare the trade receivable account. Trade receivable account. Okay, there will be opening balance brought forward, right? We study this in incomplete records. Then the closing balance. Then you can find out the sales value from the income statement, and difference will be the cash received from the debtors. So this is a simple trade receivable format, right? So to get the receipt from debtor, you have to prepare trade receivable. And for the payment, we will have creditors account. Creditors. So how do you find the payment to creditors? You have to prepare trade payables account. Trade payables account. So using this, you can find out the cash paid to creditors. Right? So preparing these two accounts are simple. And expenses paid, to identify the expenses paid, you can prepare an expense account. Expense. It's a common account, a control account. So using that, you can find out expense paid for the year. There is a question, so should we include received other income? No, you don't record the other income here. Other income goes to the investment activity, investing activities. Only these three, right? We don't have more complex questions. We have very basic, simple questions. Okay. So if they ask direct method, these three accounts, definitely you have to create these three ledger accounts. Then only it's easy for you to get the answers. Trade receivable, trade payable, expense. And interest paid, you can prepare interest expense account. Interest expense account. Opening balance, payable. Then the closing balance, payable. Then the amount which is in the income statement debit, and this will be credited. And finally, you can find out the cash payment, cash account credit. This account is debit. Okay, so we'll do an example. I'll show that. And finally, the tax paid, we prepare tax expense account, taxation account. So through this, you can find out the cash paid to tax. Okay, so these accounts are compulsory when you prepare the cash flow statement using direct method. Okay. Now let me explain the indirect method. Just understand the operating activities, the items. Okay. Then let me show the indirect method. Most of the questions are based on indirect method. And both the direct and indirect method, the answers will be same. Right. So in indirect method, operating activities will be calculated using the profits. Okay, so we are taking the cash flow from the profit, right? Because the profit will be given in the income statement, right? Now, through this operating activities, through this cash flow statement, what we are going to do is converting the profit into cash. Right? Now, you know that the income statement is prepared. The income statement is prepared using the accrual method. Payables, prepayments, receivables, received in advance, thus adjusted in the profit and loss account. So it has cash and non-cash items. Okay, so first what we need to do is from this profit, we have to exclude the non-cash items. We have to exclude the non-cash items to convert the profit into cash. Non-cash items. So what are the non-cash items? There are two. For this example, I have taken two. One is depreciation, other one is disposal, profit or loss. These are non-cash items. Okay, depreciation is not a cash payment. Depreciation is not a cash payment. Okay. It is a adjustment that we do. So these two, we have to adjust it. Okay. So if it is a depreciation, we will add, because when you are calculating the profit, you have deducted the depreciation. We reduce the depreciation, right? So if you want to convert the profit into cash, the deducted depreciation should be added. It's already has been deducted. So we have to add back the depreciation. Then if you have a loss, it will be added. And if it is a profit, you have to deduct. Okay. So how do you calculate the depreciation? To calculate the depreciation, you can prepare the provision for depreciation account, or sometimes if the PP account, if the asset account is maintained at using the PP account or the provision for depreciation account, you can find out the depreciation value, or the depreciation value will be given in the income statement, the profit and loss. Disposal profit, to get the disposal profit, you have to prepare the disposal account if they have not given. Right. So number one, we adjust the non-cash items. Number two, we need to adjust for the other activities. We need to adjust for the other activities, right? Because here we are going to find out the cash flow from operating activities. Cash flow from operating activities. So if there is any other activities in the profit, we need to adjust. So mainly in our questions, we will have other activities like investment, interest expense, dividend income. So these type of transactions, these are other activities. Because the interest expense, it is we have to separately show that interest paid. Okay. Dividend income is not a operating activity, it goes to the investing activities. That is why we adjust this. Okay. So get the profit and do the adjustments, the non-cash items and the other activities. Right. Then other than that, Now in the profit, there are credit sales, credit purchases, and other items which is not done in cash. So they are called working capital. The current assets and current liabilities related adjustments. Adjustments related to current assets and current liabilities. Okay. So working capital. So I'll give you all a summary or a note on working capital. Right. Working capital. Mainly what you will get is in working capital, the stock, debtors, creditors. Remember these three main activities: stock, debtors, creditors, trade receivables, and trade payables. There can be other things I will explain when it comes to the examples. Right. So here, either we will add or deduct. Now I will tell you how to identify whether to add or deduct. The simple theory is current assets, there is a negative relationship with the cash. Current assets, there is a negative relationship with the cash. Why I am telling negative relationship is, now let's say you are purchasing stock. Stock increase. When the stock increase, what will happen to cash? Why stock is increasing? Because we are paying cash. And assets will have a negative relationship with cash. Cash decrease, stock increase. Okay. Let's say trade receivables, debtors. Debtors increase. Oh, sorry. We'll take debtors decrease. Debtors decrease. Why debtors are decreasing? Because they pay cash. So cash increase, debtors decrease. So that is why I've taken current assets negative relationship. So if the stock is decreasing, what you do here, we will increase the cash. In increase, we check from opening and closing balance. Let's say the opening balance is 500, closing balance is 600. Or opening balance is 500, closing balance is 400. So decrease means cash increase. Debtors increase. Debtors increase means this will decrease. These two assets, current assets, negative relationship. Decrease means increase. Increase means decrease. That is the simple way to remember that. Yes. So it's easy for you to remember if you do that. Okay. Current assets, if I'll show again, if the current asset decrease means increase. Increase means decrease. Then current liabilities, decrease means this is also decrease. So current liability is positive relationship. See, liability increase. When the liability increase, cash also increase. Right? When the liability decrease, assume that trade creditor decrease, payable reduces. Why payable is reducing? Why trade creditor is reducing? Because we have paid money to them. So cash decrease means liability decrease. Okay. So that is the summary on this. Let's move to an example. So I'm going to do a question. in both the methods. One question. Both methods I will explain. But if you understand the method, then it's easy. So first, let me give the format. Right, let's do this question. Let's do this question. CLB4. Statement of profit and loss is given. So first I will explain indirect method. We have the income statement and the statement of financial position. This is the format for indirect method. Full name of the business, CLB company, statement of cash flow for the year ended 31st December. Then cash flow from operating activities, cash flow from operating activities, cash flow from investing activities, cash flow from financing activities, right? Then profit before tax, adjustment, operating profit before changes in working capital, then interest paid, tax paid. The same format. Keep space and draw this. I want everyone to draw the answer. Don't write the question, only the answer. Okay, one by one I will explain. Then we have investing activities and financing activities. Finally, we get cash decrease in the decrease or increase. Because first we need to prepare the format. Always I have said draw the format. Same thing we are following. Same steps we are following for all the questions. First draw the format, keeping spaces. After that, adjustment. Then the remaining things in the question. Okay, draw this format. I'll give you 3 minutes. Draw the format. And tell me once you are done with the format. Then after that, you have to draw few ledger accounts as workings. So that also I will draw and keep, then it's easy for us. According to the question, we have PPE. So we need to prepare PPE account, and there is a disposal loss. So we need to prepare a disposal account, and mainly the taxation and interest expense. Most questions we have to prepare them. These are must ledger. This ledger accounts are must. Okay, I'll give 5 minutes, draw all this. There is a question, so should we do both methods? Now I am doing only the indirect method. After this, I will do the direct method. So then I will tell you what accounts that you have to draw. Okay, so indirect method format, you can use the same format for any question that you get. We will do some past papers, then I will explain. Right, you can use any the same format for all the questions. Only thing, there will be the spaces, it might change according to the question. The space only will change, the format will be same. Workings also, it might change, the interest expense taxation, the formats will be same, but this, depending on the question, we can adjust this. Right. Now, okay, shall we start now? Okay. Format, then we have to start with the additional information that they have given. During the year, the company paid 90,000 for new piece of machinery. So they have bought 90,000 worth of machine, new machine. I'm reading the bottom of the question. During the year, the company paid 90,000 for a new piece of machine. Dividend paid during 2002, 66,000, and interest paid was 28,000. Okay, so shall we complete these workings? Then it's easy for us. Anyway, we have to find out the depreciation. Depreciation is given. We have to find out the cash received from the disposal. Okay, and any other purchases or disposals in the PPE. Right. So we have the statement of financial position and statement of profit and loss. So first, let's prepare the PPE related adjustments. Property, plant and equipment. Cost. This is opening 2001, 2002 closing. 1560 opening, 1596 closing. Depreciation means the provision for depreciation, accumulated depreciation, opening and closing. Then there is depreciation 180, loss on disposal of non-current assets 18. So these are the amounts related to PPE. So can you all put this into the ledger accounts? These balances into the ledger accounts. Right. PPE opening balance. Balance brought forward. It is an asset 1560 and closing balance. So 1596. Here we need the knowledge of incomplete records. We know the opening closing balance. Provision for depreciation. Opening balance 224. Closing balance 380. Opening and closing balance. So that part is done. Then there is depreciation. Depreciation goes to provision for depreciation. Here, depreciation. The current year depreciation. P&L debit and this is credit 180. Okay. And in the additional information, they have mentioned during the year, the company paid 90,000 for a new piece of machinery. So that is cash. It is a new machine. cash account credit, the PPE account debit, the machinery account debit. Okay, right. Then the loss is here. The disposal account. Number disposal, there are 4 steps. Disposal steps. There are 4 steps. One is we need to transfer the cost. Then we need to transfer the total depreciation. 3, the cash received from the disposal. Number 4, the profit or loss. We need to look into these 4 steps, right? In this question, most of the values are given. Sometimes if they don't give, we have to follow all these things, right? We don't know the cost. So that cost is the difference in this account. The amount transferred to the disposal account, this amount. You can find out the cost of the disposed asset. Then you can transfer the depreciation. Total depreciation is the difference in the provision for depreciation account. That also you can find out from this. Okay, number 2. Then we don't know the cash amount. Cash amount is not given. This is the cash. This is PPE. The cost. Accumulated depreciation. Loss is 18. Okay, can you all find out the cash received or the cash received from the disposal? How much is the cash received from the disposal? There is a question. Provision for depreciation and accumulated depreciation both are same. Yes. Accumulated depreciation and provision for depreciation mean both same. What is the cash received from the disposal? I'm expecting the answers from you all. Find the difference in the PP account. So that is the cost of the disposed asset. Then difference in the PP account is the depreciation of the disposed asset. So take those two and you have the loss. Difference will be cash. Right. So what is the answer? Right. Let's find out the difference in the PP account is 54 is the cost of the disposed asset. 54 is the cost of the disposed asset. And difference in the provision for depreciation. This is transferred to disposal. 24. 54, 24. Now the difference in the disposal account. 54 in the debit side. How much? 54 minus 18 minus 12,000 is the disposal, the cash received from the disposal. There's a question. So how did you get 54? 54, I got it. Now, this is the PP account, right? So this has a debit balance 1,560 and 90. This is the knowledge of incomplete records. So debit side more, there is 1,650. So you take the same amount here, and in credit side there is only 1,596. So difference between 1,650 minus 1,596 is 54. That's how I got 54. The cost of the disposed asset. Same way you can calculate provision for depreciation account difference, which is 24. That is the disposed asset depreciation. Loss is given, so difference is cash. Now you can apply this for any question. If you understand the basic concept of preparing the PPE account, provision for depreciation account, and the disposal account, you can apply the same concept for any other question. Right. Now let's move to these two words, taxation and income tax expense. Prepare this taxation and income tax interest expense. Right. Tax. Let's see what is given for tax. Here the taxation expense is given. Expense, the amount in the profit and loss, that is the expense for the year. Then taxation payable, opening and closing payable. Balance brought forward. Opening balance is 86. Opening balance is 86, 86, 102. Profit and loss, the debit balance, taxation 124. P&L debit, and this is credit. Difference is the cash. Cash. Cash account credit, taxation paid amount, because we need that. Then the interest, same thing. Interest Yeah, interest is 28. There is no interest payable or prepayment. This is interest expense, not payable. This is interest expense. Okay, so interest, there is no opening or closing balance. Some questions you will get the opening closing balance. Nothing. P&L 28. So how much is cash? Cash also same. So there is no payable or prepayments. Therefore, the expense for the year is completely paid. 28 is totally paid. Okay, that's all. Now we'll come back to the cash flow statement. Then it is very simple. I'm doing indirect method. Indirect method. Profit before tax is 392. Profit before tax. So we'll take that profit before tax into our answer. 392. Profit before tax. Now the adjustments. Let's do these adjustments, what we have done, the workings. Okay, so PPE related transactions. There are few PPE related transactions in any question. If you take any cash flow statement question, there are 4 adjustments or 4 transactions which will be recorded in this cash flow statement. I will list down the 4. Number 1 is you need to adjust the depreciation. You need to adjust the depreciation. Then you need to adjust the disposal loss or the profit. Right? So these 2 comes under adjustments. These 2. Adjustments. Then the next transaction is any purchase of new PPE. Purchase of new PPE. And the 4th transaction is the cash received from sale of PPE. Cash received from sale of PPE. So these 2 transactions will be recorded in the investing activities. Okay, so these are the 4 transactions. Right? So in our level, we will get only these 4. Okay. So in adjustment, let's record depreciation. In adjustment, depreciation and disposal loss. Disposal loss. So we have the amounts. Depreciation amount is given 180. Sometimes they won't give, then you need to identify. So to identify only we do this work. Even if they don't give, by preparing this, you can identify the depreciation. Disposal loss 18, so that also will be added. Okay, so these were deducted when calculating the profit. Therefore, we add back the depreciation and disposal loss. And the other two transactions, purchase of new PPE and the cash received from disposal of PPE. Okay, so these two investing activities. So already we have a purchase, investing activities, purchase of machinery, purchase of machinery, cash payment 90 minus purchase of machinery 90 minus, and we have received money from disposal, proceeds from disposal of PPE. How much we received? 12. It's a cash receipt. Okay, so main part of the question is done. This is the main part. Identifying this. This has 4 transactions. Right. Now go back to the P&L and see for any other transactions or any other activities in this. We have revenue, raw material, staff cost, depreciation, loss, profit. Okay, there is nothing. There is interest 28. So that interest we have to add back because interest expense is a separate item that comes interest paid. So see this entry. Now interest expense will be added under adjustments and interest paid will be deducted after the cash generated from operations. You have to deduct it. Sometimes you might have a doubt. Interest payment, why didn't we take under financing activity? Interest is paid for normally for loans, no? Right? So, but in most of the times we take interest paid under operating activity. The reason is in the standard, in the cash flow statement, the cash flow standard, it is allowed to take the interest expense, interest paid either in the operating activities or in the financing activities. So that is why we have taken here. In most of the question, we take the interest payment under this operating activities. All right. Now the income statement part is done. Moving, and also we will record the tax paid. How much is tax paid? Okay, we did calculate the payment of credit side is more 210. Out of 210, there is 102 closing balance. 108 is the tax paid. 108 is tax paid. Okay. Now we are going to the statement of financial position. Assets, PPE is done. Now we have current assets. Okay, let's complete the transactions in current assets and current liabilities. So as I said earlier, in our example, working capital, current assets and current liabilities. Here, these are the main items: stock, debtors, and creditors. Okay, let's see what happened to the inventory, what happened to the trade receivables, what happened to the trade payables. Inventory, opening 20, closing 24. So here what has happened? Inventory is increased. Increase in inventory. See, opening is 20, closing is 24. Increase by 4. Increase means decrease. Assets. Current asset increase means decrease. Then trade receivables also increase. Increase by, it's increased by 58, 68, 76, 80. Increase by 80. In the liabilities, trade payables also increased by 6. Increased by 6. Okay. So that part is done. Trade receivables, inventory, trade payables. Now what we have? Bank. Opening balance comes here, 56. The closing balance should be 48. Once you complete all these, your answer should be 48. Where did I take? Sorry. A small mistake. This goes here. Changes in working capital. Not in financing activity, it's changes in working capital. It's my mistake. Sorry. Okay. Right. Changes in working capital. Increase in inventory, increase in trade receivables, increase in trade payables. So everything increased. Okay. So we are done with the income P&L, the assets part, and we have now the equity and liability part. So let's see what happened to the stated capital. Stated capital is increased. Stated capital increased. So that means we have issued shares. Shares issue. Issue of shares. How much? The 64 to 96, 74, 84, 94, 32. So we receive cash by issuing shares. Issue of shares, 30, 32. Then what happened to the loan? Non-current liability. There is a settlement of non-current liabilities. Settlement of loan. 500 becomes 200. So that means we have settled loan. Repayment of loan. How much is paid? 500, 200 is 300 paid. Loan reduced. That means we have paid the loan. Now there is one last item, which is the retained earnings. Okay, for retained earnings, we will draw a statement of retained earnings. Retained earnings, the statement, the column. Okay. Retained earnings. Okay, opening balance 514, closing balance 716. And what comes to the retained earnings? The net profit will come. That is profit after tax. And you will have dividend paid. Net profit, profit for the period 268. Right. Can you all find out the dividend paid amount? Closing balance is given. Net profit and the opening balance is given. So the difference is the dividend paid. Okay, so here total is 782 minus 716 means how much is dividend paid? Minus 66 minus 66 dividend paid. Right. That's all. Now get the balance. See, this is the working is the main part. Everything else is very simple. minus 8, 48. So you can double check with the question. This should be equal to 48. Okay, so let's do the same question in direct method. Okay, let's draw the format. Okay, so this is not difficult. Draw the format. So direct method in your format, as I said at the beginning, we need workings for trade receivables, trade payables, and operating expenses. Let me draw the format. Okay, so for direct method, this is what you need: trade receivables, trade payables, and you need to identify the expenses. Everything else, you need an interest tax expense account and other things you can find out from the Shall we start now? Okay. So here the main thing is this identifying the cash flow from operating activities. Cash received from debtors, cash paid to creditors, and the payment of operating expenses. Okay, let's calculate this. Trade receivables. We have opening closing balance and the revenue means sales. So we assume that the entire sales is on credit because there is no other information. Okay. Let's prepare this trade receivables account. Opening balance 58, closing balance 76, 76, sales and cash. Identify the sales. Identify the cash received from debtors. Then you can prepare the trade payables. So to find out the trade payables, we have opening balance, closing balance. Opening balance is 6,000, closing balance 12,000. And we need purchases. Difference is cash. Okay, so in most of the questions, you won't get the purchases, but you will have the cost of sales. So in this question, they have given the raw material consumed. Raw material consumed in the cost of sales. So that is the cost of sales, 7. So prepare the statement of cost of sales, 70. This is also common for all the questions. Then how do you calculate the cost of sales? By taking the inventory, opening inventory plus purchases minus closing inventory is cost of sales. Opening inventory is 20, closing inventory is 24. Then the difference will be purchases. Find out the purchases from this. Then take the purchases here and find the cash. Operating expenses, normally you might have payables or receivables, administration expenses, distribution expenses, right? Sales commission or any administration or distribution expenses will come here. And so in this question, there is nothing. Only the staff cost is given. We have staff cost. This is the only operating expense. And it is, there is no payables or prepayments. Okay, there is a question. Why don't we take raw material consumed as purchases? Raw material consumed is not purchases. Purchases is different. Consumed is different. Consumed means the similar to the cost of sales. How much you consume. How do you calculate the consumed amount? Opening plus purchases minus closing. Okay, so that is why we did this work to find out the purchases. So different. It's 74. Purchases 70. So that comes here. From this only we find the purchases. Sales is 70. 702. This is 94. That's it. Then you can find the receipt from debtors, paid to creditors, expenses paid, interest paid, and tax paid. Interest paid and tax paid already we calculated from the previous example. We did working number 2 and 3. And those workings will come as it is. Okay. The remaining workings comes as it is. Interest paid 28. Tax paid 108. Receipt from debtors 702. Payable paid to creditors 68. Operating expenses. That's it. So you can complete the rest of the question. Okay, you can complete this. This is direct method. Okay. So next I'm going to do a past paper question. Any doubts? Any doubts? Did you all understand? Right. Now I'm going to do 2019 paper. Direct. There is a question, how did I get 66? That is from retained earnings. We already calculated the dividend paid. 66 comes from dividend paid. Opening the retained earnings difference. Opening balance is 514, closing is 716. The difference is due to net profit and dividend. So we have the net profit, and there is further difference 66, which is dividend paid. Cash equivalent. Cash equivalent means now once you do all these activities, you get the net decrease or increase. It is the during the year net increase or decrease in cash minus A. Then you add the opening balance, opening cash balance at the bank, cash and bank balance. So once you add opening balance, you get the closing balance. Cash book, opening balance plus the transaction, the net balance, then you get the closing balance. Okay, right. Let's do 2019 paper. Two 2019 past paper. 2019 error, question number 6, part C. The balances of some of the assets and liabilities of Nihal PLC were as follows. This is, they have not given the full question, they have given a part. Right, the requirement statement of cash flows using the direct method to identify the operating cash flow. So we have to do the direct method. Okay. Right. So draw the format for the direct method. Nihal PLC. Cash flow statement for the year ended 31st March 2019. Okay. Right. Then also do some workings. Since they have given the trade receivables, trade payables, operating expenses, we need those 3 ledger accounts. And following transactions took place: total purchases, cash discounts, owner shares. The company purchased a motor vehicle on cash, equipment, profit. Okay, there is disposal. So we will draw a PPE and disposal account as well. PP, book value account, and disposal account. Okay, can you all do this? Right. So let's start the question. Okay. The balances of some of the assets and liabilities of Nihal PLC were as follows. Trade receivables, trade payables, operating expenses payables, cash and cash equivalent. Number one, the total sales and purchases for the year were 1.2 million and 550,000 respectively. All the sales and purchases were made on credit basis. So we can prepare trade receivables and trade payables account. Okay, what else we have related sales and purchases? There is cash discount allowed to trade debtors, so that will come to the debtors account. Other than that, there is nothing. So prepare the trade receivables and trade payables account. Okay, opening balance brought forward 2018 180,000. 180,000. Let's do in rupees. Opening balance. Closing balance 250,000. 250. 250,000. Then sales 1.2 million. Sales 1.2 million. Then there is discount and cash. Cash discount allowed. Discount allowed is 30,000. Difference is cash. Very simple. If you know incomplete records, this is same thing. Same thing that we are doing. Identify the cash received from the trade receivables. Trade payables, opening balance, it's a credit. That's 104,000. Closing balance brought forward 110,000. Balance carried down 110,000. Then cash purchases. Purchases 550,000. Difference is cash. See, very simple. Operating expenses, there is no opening balance. Right. Operating expenses, I will tell you there is a small thing that you need to know. Payable 15,000. Operating expenses payable. Right. Now, expenses, we have to deduct the depreciation and take the balance. Then only you get the cash. You can do in two methods. One is credit 95. You have to show the depreciation separate. 35,000. Okay. Or else, without showing the depreciation here, you can show only the operating expenses without depreciation. Then it will be 95 minus 35. 60,000. Anyway, cash balance will come as the same amount. Let's find out the balances. Cash. $1.1 million is the trade receivable balance. That means the cash received from debtors. Why do we put credit side operating? This is the P&L amount. Total operating expense for the year. This is the P&L amount. That is why credited. Debit P&L, expense account credit. The cash amount only we have to debit here. Cash account credit, operating expense debit. Okay. When you transfer to P&L, expense account credit, P&L account debit. That's why this is right. This is the control account, operating expenses control account. This has opening balance, closing balance. That means prepayment, payable, everything. $690. $580. Remember this part because in most of the questions we will get this operating expenses with depreciation. Okay, so don't forget to exclude the depreciation part. Right, most of the students, they might have issues in this depreciation part. If you want, you can have 95 here and 35 here, or else what we can do is, without taking the depreciation here, only the operating expenses you can take. This means 90 minus 35 without the depreciation. So you say get the same answer. Okay. Received from debtors, paid to creditors, and expenses paid. $1.1 million, 580,000 minus 45,000 minus. What else? The interest and income tax expense for the year were 25,000 and 65,000 respectively. Interest paid and income tax paid amount 20 and 75. So we have to take only the paid amount 20,000, 75,000. Nothing to calculate. Don't get confused with the expense and the payment. So to make you confuse only, they have given the expense separately and the payment separately. Okay. Right. Total interim dividend paid. Interim dividend means it is your financing activity. Interim dividend. During the year, the company issued 30,000 ordinary shares at 20 rupees each. This share issue includes the capitalization of reserve of 200,000. Capitalization of reserve means bonus issue. Issuing free. The money due on balance share issue has been received during the year. 30,000 shares at 20 rupees. So how much? 30,000 into 20 is 600,000. That's the share issue. That is the total share issue. This includes capitalization of reserve. Bonus. So how much is bonus? 200,000. Here. Then how much is cash? Cash receipt. Cash receipt is the difference. Out of total 600,000, if we issue a bonus 200,000, then cash is 400,000. So share issue, cash received from share issue is 400,000. 400,000, it will be added. Next. If you all have any questions, you can ask me. During the year, company paid 220 as a part settlement of long-term loan. So it is also financing activity. Settlement of long-term loan, 220,000. Settlement of long-term loan, 220. Finally, we have the PPE related adjustment. On 1st of April 2018, the company purchased a new motor vehicle on cash. On the same day, an office equipment was sold for 250,000 on cash with a profit of 80,000. As a net result of these transactions and depreciation, the carrying amount of property, plant and equipment increased for the year by 205,000. Okay, so this is the critical part. Right. Now they have not given the opening balance or closing balance, but they say that the PPE increased by 205,000. So since it is increased by 205, we will take the opening balance as 0 and closing balance 205. Okay, 205 from the opening balance, it is increased by 205. Even you can assume any amount. Let's say 1 million 1 million is the opening balance, closing balance 1,205,000. Results will be same. We don't know the exact amount. Right. Now let's do the adjustment. 1st of April 2018. 1st of April 2018 means it is beginning of the year. The company purchased a new motor vehicle on cash. Right. So it's a purchase of new motor vehicle. On the same day, an office equipment was sold. So there is disposal. Sold for 250,000 on cash with a profit of 80. Now the disposal account. Here we have the cost, we need the cost or the book value. Since this is maintained at the book value, you can take the book value of the PPE disposed. The net amount only you have to take, cost minus the depreciation. In the cash amount, and there is a profit. Right. Cash received from the disposal is 250,000. Cash received is 250,000. Profit is 80,000. Now, what is the carrying value of the disposed office equipment? The office equipment disposal. $250. 170. So that is the book value of office equipment disposed. That's the book value. Now you need to find out the purchase amount. This No need accumulated depreciation account because the accounts are maintained at carrying value. So we don't need a accumulated depreciation account. We will prepare the entire account set for carrying value. Right? Because the depreciation will be taken to the PPE account directly. Directly we credit the depreciation into PPE account, not a separate account. We don't have a separate account because uh, accounting for depreciation can be done in two methods. Accounting for depreciation can be done in two methods. One is directly you can credit the depreciation into the cost account. So you will maintain the PPE at book value. So there won't be any accumulated depreciation account. Then the second method, we use accumulated depreciation account or the provision for depreciation account. Okay, now depreciation, cash. You need two items. Right. Depreciation is 35,000. We know that it's given. Then you can find out the value of purchases. 410,000. Okay, now investing activities. There are two transactions. Purchase of PPE 410 and sales proceeds from the disposal of office equipment 250. That's it. Opening balance, cash and cash equivalent is 120. You can complete the rest. There is a doubt to explain the depreciation again. Yes. Yeah, I'll do that. Now, in this question, the PPE account is maintained at the book value, carrying amount. Okay, so we don't have any provision for depreciation account balances, or the accumulated depreciation account balances are not given. So at that point, we prepare the PPE account at book value or the carrying value. So when you are preparing the PPE at carrying value, the depreciation, current year depreciation will be credited here into the book value account, PPE account. Right? Even when you are transferring the disposal, we transfer the book value because the PPE account is maintained at the carrying amount after deducting the depreciation. So when you are doing the disposal, we don't need to show cost and depreciation separately. The net amount you can take to the disposal account. We take the net amount. Okay. Right. So now can complete the answer. Okay. So you all can complete this, and I will share some other questions that I have done, and you all can do all the other questions and complete this chapter. Okay. So whenever we will get more time, we will do the other questions as well. Try to understand the basic concepts. Then it's easy. Right. Any doubts? Okay. So we'll conclude the session.